Hi traders, I just wanted to do a short video as a basic introduction on using pivot points in your trading. Pivot points are a widely followed technical analysis that many people and many traders look at and respect. And I want to give you a very quick and a very easy way to understand how to use pivots in your trading. Now, the first thing to be aware of when using any technical analysis is you don't just apply the technical analysis randomly. So you want to find a fundamental or a sentiment bias for the currency pair that you're trading. So for example, in front of me I have the euro US dollar currency pair, and the sentiment when I came to my desk this morning on the 13th of November was a bearish bias for the euro US dollar pair. The Italian government are insisting on submitting a budget deficit to the EU. The EU don't like that budget deficit. That Italian debt issue has been weighing on the euro US dollar pair. Last week, the Federal Reserve says we're keeping on our current path of one rate hike for this in December, and then three rate hikes coming in 2019 is the consensus view. So, in other words, there was still this euro US dollar bearish sentiment in the market. So, when I came to my desk this morning on an intraday basis, I was looking to go short. Now, one particular area that got my attention was when I used pivot points. So on the chart here, this is a 15-minute chart, so intraday trading, and I'm looking here at the 100 and the 200 moving average. Now, here, just using traditional pivots for the 15-minute chart, it plots the pivot points for you. Now, you can get all these done for you. There's lots of different software that you can find. You can find pivot points all over the internet, and this is just one that's free service that is readily available for anyone. So it's helpful for me to show you this because it's free and you can access it. It's on Trading View, and here you have, when I came to now there's the central pivot point for the day. So I saw that the central pivot point for the day was around the 100 moving average, and you have the pivot point and the 1.1250 sort of significant number. You know, the 0050 numbers tend to gain significance. So that told me that that was a significant place to enter the market, and you could enter there with your you could have stops, you could work out the stop, you could have it halfway between there and the next pivot point, or you could just use, like, you know, somewhere between 30 to 50% of the average true range for the daily candle. You could use that, and you want to be taking, you know, 40 to 60% points, 40 to 60% of the average true range for your profit target, or you could even look to target the next pivot point. That's just a very simple explanation. But again, the key thing with pivot points is only use them in conjunction with fundamental and sentiment bias for the currency pair that you're trading. Don't just trade them randomly, because they're not a magic tool. They can only be used in that context. Okay, guys, I hope that helps. It's a brief introduction to using pivot points in your trading. Add it into your technical analysis, and it will help you find good, solid places to enter the market.